traders? This is Rob Reinhold. Nice to see you here. I'm joined by Mr. Darren Fisher. This is the Trading Room, and this is monthly options expiration week. So let's start off with what happened last week, and it was a bullish week. It was a very bullish week. The market had its fourth weekly gain. We are now on the best streak since November 2021. So if you think back of where we were last year, we had a big market rally in the fall. Everything was all great. All the tech stocks were going crazy. And then really from Thanksgiving, when the Omicron variant came out onward, that was the top for tech. And everything's been pretty much down other than a couple little rallies during this year. Now we've had 4 straight weekly gains, and the market has definitely turned. We got reports out of the CPI and PPI. CPI came in well below expectations of 0 and 0.3 on the core. The bigger surprise, though, to me was the PPI. And I remember, Darren, you said last week that you wanted to see this PPI down 0.5 and the core down 0.2. What do you think about that number, Darren?
It's definitely interesting. It wasn't expected. The core at 0.2, is what it is. I mean, the month-over-month number. So we still have high inflation. It's just instead of 9.1, it's at 8.6. So that's not to say that this is going down. Have we seen peak inflation? Quite possibly, but we still are in an inflationary environment right there. So the market liked the news, obviously. So there's no arguing with the market, and we'll just see what if these gains hold in here. But I think you definitely, after seeing this, you have to divorce your opinion about where the economy is going from where the market's going, and just completely flush it out of your mind and only trade the technicals. If anyone were to start shorting this market right here, I think you hurt yourself very, very badly. I think you just have to, until the market tells us otherwise, we just have to be bullish no matter what our opinions.
And Darren, that reminds me of one of our sayings at Maverick is sometimes you got to plug your nose and buy. And it definitely feels like that kind of market. I actually heard a lot of the pundits on TV and also some written stuff about how a lot of people said, hey, yes, inflation's great, it's coming down, but we're not out of the woods yet. And we actually heard a couple of Fed speakers come out after these reports and kind of said, hey, everybody, we're not done with inflation. We still have a battle to fight, and it's not won yet. Well, we'll have to see where this goes, but as Darren said, I don't care what your opinion is. We follow the technicals of the markets, and the technicals of the markets say that it is a bullish market. And we pretty much wrapped up with second quarter earnings. Look, they weren't fantastic. They weren't great, but remember where we were in the market. We had sold off 20% on the S&P, 30% on the NASDAQ, and so expectations were very low. So when expectations are low and they come out to where they're not terrible, sometimes that's actually good news for markets. So let's take a look at the actual price action in the markets. We had a big gain, Dow up 3%, S&P up 3.2%, the Qs up 2.7%, Russell up 5%. That's a nice week for the Russell. Oil, gold, as you can see, this was a complete risk-on move. Everything was bought. Let's take a look at the S&P. Now, we've been talking about this band of resistance between the 420 and 430 area as our next area to get through. And look, we're not through it yet, but we're definitely coming up to the top of it. This market is just going to have to push through these levels. And you can see, we just have some overhead resistance here. It doesn't mean that it's not a bullish market. It just means that we are going to have little stops periodically, just like we had a stop periodically here when we ran into this resistance. We're coming up into this 430 area. We're probably going to get another bit of choppy trading before it pushes through and goes higher. So the market is definitely very bullish, and I think you have to be there. We've got, 20, 50 crosses, and we're starting to get this 50 steepening. Once this steepens a little bit, we're going to be able to move to a much more bullish position in equities. So right now we are moderately bullish. Here is the NASDAQ. Again, we had this band of resistance right between 320, 330. We're right there knocking on the door. If we get through that, it looks like 340 is our next spot to work through. So the market is stepping higher, hitting these resistance points, spending some time to work its way through them, but ultimately still bullish. And here we are, look at the VIX. The VIX is down to the lowest level we've had in a while. It's probably going to hover in this 20 for a while. We haven't seen below 20 in a while, a long time. And I think we could get below that if we continue to push higher. So let's talk about this week. This week, we've got, again, just more resistance areas to move through. So we're bullish, but we think it's going to just be moving through these. Bonds are very tame right now. The bond market didn't really go higher. As we said last week, above 3%. Now it starts to become problematic for the high growth tech stocks. But right here, right now, everything looks good. And this is the third Friday of the month. So monthly options expiration, let's make sure all of our Maverick traders has their positions squared up on Friday. This week, we have a couple of economic reports. The biggest one is probably going to be the Fed minutes. Usually we pretty much ignore the Fed minutes. They don't really matter much. But now I think we'd really like to see what it is they were thinking at their last meeting and really give us an idea of what's likely to be in the future. Did they know that there was going to be a little bit less inflation coming, or is this something that they are adjusting to as well with the market? Retail sales, I don't think those really matter all that much. Everyone's looking into the future right now. Everyone's like, okay, we had a bad first half of the year, but now we're looking into the future and it's all rosy and good. So I don't think any of these lagging economic reports really matter. Now, we do have some leading reports, the Empire State Manufacturing Index on Monday and the Philly Fed Manufacturing Index on Thursday. Those have been pretty weak. If we get those up back above 1 and back above growing, I think we're going to see some nice reactions in the market. So ultimately, we are at a +3. This is a bull market. And whether you like it or not, that's just where we are. And I like that, Darren, plus 1.5. I think that's where I would come at as kind of debating, okay, is it going to be a really bullish week or a sort of bullish week?
Yeah, this was a little bit difficult to do. It's like, are we just going to keep melting up, or are we going to start to get velocity behind these moves? I mean, you think back, you look at Monday and Tuesday's candle, it really looked like we were rolling over. Then we had that gap up, and on Wednesday, Thursday looked to be a bit of a mixed bag right there. And then, Friday, I mean, the trend is up. You can see the trend, but these markets are very difficult to get a good entry point in. And like you said, just got to plug your nose and buy. I mean, the trend is to the upside until it isn't anymore. And you might just have to sit through a couple of days of pain in some of your positions before the trend reasserts itself. So, I mean, that's what I'm looking at right there. Now, with the VIX being as low as what it is, there's a countervailing theory out there. And it's the theory of the market's going to do the best thing they can to shaft as many people as possible. How do they do that? We're up. We get above this resistance area right here. We poke our nose about it. It begets a bout of buying, and then there's no one left to buy, and we turn over from there. That would probably hurt the most people right there, because the shorts would be out of their positions. The bulls would have been, they would have shot their powder, and then there's no one else to buy, and then the trend goes down from there. So that's a countervailing theory. With the VIX as low as what it is, the market is just looking at out there to see who they can hurt the most. But until that actually shows itself, you have to be. So on that note, let's take a look at some different sectors here. All right, so look, you can see the sectors right here. Yeah, energy had the best performance, up 7.38. And energy has been very volatile, both to the upside and to the downside right there. And, it makes it a little bit difficult to trade, but I think we're going to see that energy is finally starting to reassert itself. Financials and materials both had really good weeks right there. Financials a little more in a trend. And you're going to see materials when we look at an individual. This is kind of just the beginning of a small ray of hope to be bullish in there. Surprisingly, healthcare, it still participated, but it was the weakest sector, up 1.65, and it had been really doing quite well. Everything else up between 2.5% and 4.5%. So it was a broad-based rally. And you're going to see it just basically moved the needle on everything a couple points to the right. So looking at utilities first. This is the first time in a long time that I've been +2 on utilities. I have to say that it's just time to get more bullish on utilities. I don't care why. I don't care about the fundamentals. I don't care about the historics. You just look at this price action and say, yeah, utilities are hot right now. And it's just time to be more bullish on them. I mean, take a look at that candle on Friday. I mean, a gap up and close the highs. That's very, very strong market action for a sector that is traditionally like watching paint dry. Look at communication services. This is the first time in a long, long, long while that I'm actually at a +1 on anything plus in the communication sector. It showed me it wanted to do it. It regained the 50 right there, and it kept going, kept putting in some better action. As far as how much this runs, we'll see, because you've got a lot of overhead resistance. I mean, you take a look at a year-long chart on here. It's been nothing but a march downward. So any bit of resistance is just people praying that they get back there so that they can get back to break even. That's very difficult for a sector to get through, but you can see, I mean, you have to be a little bit bullish on communication services. So +1, and we'll see where it goes. Real estate, looking pretty good at real estate. +2. We had the 2050 cross. That's what really got it for me. In addition to going through that previous resistance right there. I mean, just knocked it out in one day and kept going. So we could see, we might drift up a little bit here, but I think this one, real estate's one of those weird ones that it develops velocity very, very quickly, both to the upside and the downside. If we're putting in new swing highs, I think this could get through resistance fairly quickly as well. Coming up on industrials here, I'm at a +2 on industrials. 2050 cross, going through, breaking right through resistance, very, very quickly. And I think this is where we're seeing a lot of things. The future apparently looks a lot better for industrials. Some people want to participate in there. You want to look at some different industry groups in there as well to see what is working. But as far as the sector goes, I think you're looking pretty good. Healthcare, even though it didn't have, it had an up week. I'm at a +2 on here. I mean, this gained, this had 2050 cross before a lot of other stuff did. We're breaking through resistance. Healthcare is just one of those ones that is going a little bit slower than others, and which is fine with me. I don't want to get into a lot of positions where I'm happy one day and sad the next, when just the general market movement has you vacillating between wildly profitable one day and a max loss the next. I think healthcare is one of those ones that, while it is a +2, it's going to be kind of a more sedate +2. It's not going to move too fast to the upside. Consequently, I don't think we're going to get any very sharp downside moves either. Financials, I've been kind of lukewarm on financials for a while, but it's the 2050 cross that made me much more bullish. And that happened earlier this week. Cleared out that overhead resistance fairly easy right there. And we're kind of in this band of resistance as well. I think we punched through this. This showed us some strength, and I think it's going to continue to attract some new capital coming into there. Consumer, with everything else being at a +2, you've got to have some way to differentiate what really looks good. And consumer is one that I think has been looking good. This is a +3 for me. I generally don't get up to +3 on the sectors, but I had to have some way to differentiate between what looked good versus what looked great. So this is one, I think we're at a +3. I think it's up to 180. I think is the next monthly target right there. I think that looks pretty good. So there's definitely some upside potential for there. Tech is another one that has actually been looking good. We didn't have the 2050 cross as soon as we did with like healthcare and consumer, but this is still looking pretty good. If you want to rate this, a 2.5, I could get behind that as well. But I think technically you just have to say, look, money's coming in. This is a +3. Moving on to materials. Had been at 0 for materials for quite a while. We're stuck in between that 20 and 50 right there. It regained the 50, and we're about to have a 2050 crossover in materials right there. So I'm at a +1. A lot of damage has been done. So I think this drifts up more slowly than a lot of other ones. But this is not one that I want to definitively short. So I think this is looking good. A little mild play to the upside here. It's the exact same story in energy here. We regained the 50-period moving average. A little bit more damage had been done, but remember, energy came so far, so fast, for so long for us. When it had the pullback, it was a very, very strong pullback. But I think you have to be bullish on energy again. So as we rack and stack everything, energy, materials, communication services, slightly bullish at a +1. Don't expect too much from them, but I think you could start taking some bullish positions there. A lot of stuff sitting around at +2: industrials, financials, real estate, utilities, and healthcare. All those are pretty bullish, looking pretty good. And then tech and consumer, they're the two best performing sectors, two best looking sectors as well. I think if you wanted to take some shots at some more aggressive bulls, those are the two sectors I would take a look in. So let's take a look at some potential picks. Yeah, last week we were long AMT, and that it was up 2.3%. Not a whole lot of movement right there. So if you've got some more time on, I think a lot of people have another week. That's probably going to be looking pretty good for you. This week we're looking at Starwood Hotels, STWD. And you can see this is put in, we're right at resistance that we put back in May and June. Had a little bit of a dip, but we're in this really nice ascending triangle right there. And depending on how you draw the lines, it looks like we broke out on Friday. If you want to give this another day to confirm, completely fine as well. So what's the best way to play this? Probably going out to September. This has really been the year of the diagonal spreads. So going out to September along the 21s, and then August 24th. Give yourself 2 weeks. Short the 24s. As long as it just hangs out at this 24 area, then you're making the best money. If it shoots up, you're making a little bit less. But this is one that I think is looking good. If you only wanted to play this out to next Friday, I think you could do that as well. That might be something you want to take a look at. Yeah, communication services. Last week in communication services, we were short Roku. Well, with the strength of the market, Roku was up 1.88%. But you can see that was below what the rest of the market did. If you wanted to keep Roku for another week or so, you probably could. Otherwise, we're just write it off and go on to something else. This week we're looking at Snapchat, and even though we're very mildly bullish on communication services, there's a lot of stuff in there that just doesn't look good. And this is a nice little bear rally. Wait for confirmation. That's been the key to a lot of these positions, waiting for confirmation. It might roll over at 12. It might roll over at 1250. But wait until you get that lower low and that lower high. And then this one looks like it's, this is pretty volatile. Look at the scaling on there percentage-wise. I think what you go out to September 2nd, first week of September, and do that 11-12 pair call spread. That's going to be theta positive for you, and you're going to capture a good deal of the move. I mean, that's an 8% move, 8.5% move right there. So just wait for it to roll over and wait for it to confirm and do something pretty puny, that 11-12, but you'd be theta positive so you can sit through it. In healthcare, last week in healthcare we were long Danaher. This is one we're a little bit disappointed in. Even though it was up, it was only up 2.67%. So that was one that we definitely expected to see more from. But hey, you're probably bullish right now. This week we're looking at Veru Incorporated, VERU. It's in a multi-month high base right now, and you can see Thursday. I mean, this lasted between about 11 and 17, and it's been basing for 3 or 4 months. And then on Friday, it came out and did so on good volume. So this looks like it might have a few month run to the upside as well. That's a good rule of thumb. If something bases for a certain period of time, the next move is going to take about that same amount of time. So if you want to be aggressive, go out to September and those 16 calls. If you want to be a little more conservative, just again, go out to the September 16 calls and short next Friday's 19 against it. I think that's probably going to be the one that I'm going to take a look at.
Last week in industrials, we had UPS as a long, and it did nicely for us, up 4.1%. So definitely has a lot of momentum to the upside here on UPS. This week, we're staying with the longs here. I think industrials are really cranking here. Yes, they're a little bit overextended, but What that means is this is where the money is pouring into. So this week, Johnson Controls, and we take a look at this band of resistance here. We blew right through it. Now, they had a bad earnings miss back here, and you can see that it's been below that. We've got a lot of room to make up here, and really up until 60 is the resistance line, and up until then, there's really nothing holding it back. So we take a look at potential trades. Very conservative trade, you can do the September 52.50 and sell the August 57.50. Or you could look to sell the August 58. This one has a lot of strike prices. You can basically put that upper strike wherever you want it. So that one is going to be just a 1 week trade, and then you basically take a look at it on Friday and say, hey, do I still like it? Or you could just simply go out to September, do the 55.60 bull call spread, and let it go. And if it goes above 16 holds, then that's going to be a max gain for you on JCI. In the financial sector, we had Visa. We had Visa basically in a butterfly, but it was a slightly bullish butterfly. And Visa was actually down 2% for the week. So it is sitting right on the bottom edge of our profitability for our trade. If it gets a little bit more strength next week and just goes up a couple points, it's going to go right into our profit window for our butterfly that expires on Friday. This week we're staying with the butterflies, and this is US Bancorp, USB. Now look, we have seen this one just really going nowhere. We were in the 49.50 area back in May. We went up to 53, down to 45, and this was all in a lot of volatility in the market. As you can see, this one's pretty well behaved. So really, I'm looking at like a butterfly in this area, basically saying, okay, I think it was going to stay in this 49, 48 area. And so I just want to put a butterfly around there and try to capture it. And I'm not going to go out all that long. So just a 1 week or a 2 week trade on USB.
Yeah, consumer. Last week we were long BJ's Warehouse, some events BJ. That one did not perform. That was down 3.1%. So that might be getting to the point where you just want to cut your losses, redeploy your capital, and move on with a clear head. All right, so for consumer, what we're looking at is Etsy. And you can see there's no real good chart pattern to this one. It's just this thing got strong before a lot of other things did. It just kept going up. So we're just going to name this relative strength. Now, you have to go back all the way to March to see any type of resistance. I mean, this thing came down. So we've got a little bit of resistance at that 120 level. So when we're at this is a great for a diagonal call spread. Go out to September, go long those 115s. And this next Friday, August 19th, sell that 120 to it. And this is going to be at the money. You're going to be pulling in a boatload of premium on this. And theta is going to just bleed away from Monday through Friday very, very quickly here. If it shoots past and gets up, you made a little bit of money. If it just hangs out at 120, you made the most. But this thing just does not want to go down. This is one it's been strong, and it's been strong before a lot of other things turned. Take it, run with it, play with it. But I think a diagonal here is definitely what you want to do. Last week we were long Corning, GLW, and that one had a pretty good week. We were up 4.86% for Corning there, and so that's looking pretty good. We've got another week left on that one, so I want to see where that goes to. This week we're looking at ON semiconductor. Nice bull pullback. We had confirmation on Wednesday that that's where you wanted to get in. Still looks good. I mean, and it cleared out a lot of overhead resistance on Friday here. So you've got kind of a double play going on there. That it pulled back right to classically to the 20-period moving average, and then confirmed going up, and then 2 days later, 3 days later, you're breaking through previous swing highs and resistance. So this one's looking pretty good. The aggressive play, go out to September and long those 67 calls. If you don't want to pay that aggressive, I think this 2 weeks, August 26th, the 70-75 bull call is definitely where you want to take a look. Go up to 75. I think that this does move. This does move quickly. So I think 75 is a probably the best way to put it, a meritorious target for Etsy. A meritorious target for ON Semiconductor.
Last week in materials, we went on a sideways trade, and we put in a sideways to slightly bullish trade on Livent or LTHM. And you don't love it when your sideways stuff goes up 21.8%, which was the weekly gain for it. So unless this thing has a pretty lousy week next week, looks like this thing is going to blow right outside of our profit window on this butterfly. This week, we're looking at Mosaic. Mosaic is a fertilizer company, and they've bottomed just like everything else. And you can see that it's just been putting in about 2 weeks here, right at this resistance level. So I think once it breaks out through this resistance level, we're going to be able to get up into these areas, right around the 60 area. So that's what I'm looking for. Just a really nice 55 to 60. Taking a look at full call spread. I'm giving it 2 weeks to get up there. You can take a look at the diagonal. The diagonal looks like a great trade as well. I want to be a little bit more directional, as I do think the materials has a little bit of catch up to do with the rest of the market. And last is energy. We had energy long last week, KMI. We had it as, again, a slightly bullish butterfly, and the KMI stock moved up into our range and then moved a little bit past that. Still have one more week on this trade, but it looks good at this point. This week, we are going to be staying with this sideways theme with Marathon Oil. Here is a stock that really hasn't been able to participate in anything other than the big drop it had in June. It had a huge drop in June, but then since then, energy has been very volatile, and this thing has not been volatile. So it's really just trapped here in this area. So we're going to be looking at a slightly bullish butterfly. So really up that 25 is going to be that midpoint. And really just build this butterfly out and choose your time frame. I'm going to be taking a look at doing 2 weeks out on this. I'm going to be going 1 week out on this and really just put this out there. And if it hangs out in this area, it's going to be a nice profitable trade. Looking for something that's a little bit less volatile than the rest of the energy sector to place a sideways trade on. We always love our Maverick traders to jump onto our forum, throw out your own trades, start up the discussion, and help everyone out make some money together. Let's wrap this up here. We are above the 50. You can't be bearish. We've been saying that for the last 4 weeks now. Once we got above that 50, you had to switch from net bearish to net bullish. You just had to. That is just the rule. Yes, we are breaking through resistance levels, but it's going to be a churn. And understand that this next week, we might pause. We might have to get a little bit more momentum before we can break out to the upside. But the upside is looking much more likely than the downside. This week, we're going to be meeting live on Wednesday as usual, and then we're going to be putting out a lot of content to you as well. So have a great weekend, everyone. Thanks for joining us, and happy trading.
Good trading, everyone.